G'day everyone, welcome back to Pete's Investing. This is July 20th, 2023, and today I'm changing the format a bit. I'm going to be showing you a few various instruments in one video rather than posting separate videos. Just let me know what you think in the comments if you like this format or if you prefer the previous format. I'll try and keep it brief. So we're going to be covering silver, gold, the S&P500, the USDollar DXY, NASDAQ, and US Canadian currency. So first off, let's look at the silver price analysis, and this is on the hourly. Now I'm going to be showing you primarily the divergence potential reversals for each of these. Now that we've still got the oscillator down here and this indicator, which indicates if the price is going up or down. Now again, this is on the hourly, but we would apply the same thing on the daily and weekly. But again, here we're just going to be focusing primarily on the hourly and show you the divergence. So you can see here a bit of history. We had a bullish divergence here on the CCI versus a downtrend in the price, bounced up and hit our little target area. And we've currently got this bearish divergence playing out, and it's been there for a number of days now. You can see there on the price, and it's broken up through this resistance at 25.01. So assuming it breaks down, we've set this target here. Now in terms of setting entry levels, I just draw a trend line, and I typically pick a few spots. Typically you want to hit at least 3 candles to draw a valid trend line. So if it breaks below that trend line, that'll be a short entry, and that's our initial target. And again, if you're new to the channel, our initial target area is, and I pick the recent low to the highest level. And you can see there that's currently at the around a 23% level. So it's roughly drawn, of course. What I did and what I've done is I put it just a few points above the 23% level to improve your probability of success, and that also aligns with this previous resistance area at 24.53. So that's our target on the hourly for silver. Next we look at gold. And likewise, we've had a few successes back here. We had a bullish signal back here on the CCI. That bottom there is higher than that bottom. So as long as the divergence is bullish and the price is going in the opposite direction, that's where we look at taking an entry. And again, we had a smaller divergence in this little range there. Again, a bullish little divergence there versus a bearish divergence there. And that also played out. So you had an initial target there for that small one, and again that target would have been drawing a Fibonacci between the recent high, and that aligns with the 38 to the 50% level. And if we took it out further, let's move, then we've got a higher target, you can see there, which it hit on that recent high there. So if we why isn't it, so if we drew a Fibonacci on that range, you can see there again a lot of this drawing and charting is like 80% art and 20% science. So there's no hard and fast rules, but I'm just giving you the artistic approach in terms of how to place entries and exits. So that target there was also hit with this recent price activity, and now we've got a recent bearish CCI divergence versus the price. Now again, this assumes the price falls from here. Of course, this can keep rising. So you can see here, for example, there was a bullish divergence there. It's there, but the price took a bit of an upswing, but it kept falling until this point here. So in this case, as long as the CCI remains below that level there and the price keeps rising, then we just follow it and track it until we get a breakout. Now in terms of a breakout entry strategy, we'll pick at least 2 or 3 candles. That includes that area there, cuts through those, and that'll be our entry. And our target area there again is the Fibonacci between a recent low to that high. And again, I've taken it a few points above the 38% level as a target area. So that's gold. Next we've got S&P 500. We had a few bearish divergence here, a long one compared to the price there, and another short one. So again, those 2 little target areas were hit depending on the smaller one and the larger one again, I just use the Fibonacci, so I choose the closest Fibonacci range. They were hit. And then more recently, we've got this other bearish divergence versus the price. Same sort of logic. You'd wait for it to start breaking to the downside. And I would zoom in and I'd pick, so there's a few touch points there. And if you want to be extra conservative, you could always take it out and draw another entry level. It's a bit lower, so it's not much difference really in terms of entry. So somewhere in that range, you would enter. And again, Fibonacci range, you would pick the lowest point to the high. And again, that happens to be the 23 to the 38% level, which I've added there as a target. That also aligns with this ascending trend line, which we drew some time ago. So that's where we are with that on the S&P 500. Now, of course, there's no guarantee it's going to bounce from there. It could actually fall through and start a bigger decline. So these divergences, there's no way of knowing how far they're going to fall. So that's why I picked the closest Fibonacci range to improve probability of success. Next, we'll look at the US dollar. Again, on the hourly, these are all hourly charts. So we've had a few back here that worked and hit their targets. And more recently here, we've got a bullish divergence. You can see there the CCI is still rising versus a bearish divergence, and the price has bounced from there. So we stop it at that point. And then we draw our entry level. So let's pick, so it touches a few touch points there. So theoretically, you would have probably entered around there. And in this case, that wick on that candle went as high as 10.012. And let's see if it hit the target. So if we drew from that high to that low, you can see there the 23% is 10.012. What do we say that was? 10.0. The high was 10.012. So it would have hit the target just possibly. And that's why I like putting these target areas to be, again, to improve your probability, just a few points below the actual Fibonacci level. So again, there's a good chance it may come up and bounce off this previous support line, which is at 10.050. But again, I just to improve your probability of getting a successful trade. If you entered long there, you would exit it somewhere in that area there for improved probability. That's the US dollar. Next, we've got the NASDAQ. So again, I had a few successes back here. Bearish, bullish on the price, came down. And the next one actually, you got to be careful. This one actually, I drew the Fibonacci from that level there. So that was drawn around the 38% level. So that's what I'm saying. Always be careful. So it didn't hit the target in this case. So that's why I prefer, I won't move it because I don't want to be accused of manipulating it. That's why you always choose the area, the closest Fibonacci level, which would have been the 23% in this case. Now, in terms of entry, let's delete that. In terms of entry, let's zoom into this on this one. There's a couple of ways of doing it. And again, this is where art comes in instead of science. You could do it that way. So possibly you may not have entered until that point there. So that might have been a bit ambitious. So you've got to draw it. So sometimes it shows a bit of a V, like in this scenario. So if that happens, and you've got a bearish divergence on the CCI, let me draw the CCI divergence. That's down to that level. So as long as the CCI stays below that initial opening, then the divergence is still in play. So sometimes just ignore that. And the other way you can do it is just, again, draw. Let me do that again. You can probably draw it's not liking it today. Let me do it one more time. So it's assuming we came down. So again, just try eyeballing it. Again, this is where pick the most points, most candles hit on the trend line. So you possibly could have entered it short there, and that would have hit your target in that point, which is a 23% level between that low and that high. So again, just that's why I emphasize try and choose a nice area. Again, draw a trend line with the most touch points to enter, and then draw the closest Fibonacci range from a recent low to the high. that includes that divergence range. You must include that divergence range. In other words, you can't draw Fibonacci from there to there. Okay, where are we today on the NASDAQ? So again, a bearish divergence here, bullish on the price. So again, as an example of entries, and we'll pick a spot where it's going to touch. So let's make it touch that. So that could be an entry level there. It's not far off the entry level now. And you can see there, coincidentally, it's trending along that trend line as well, the one I've just drawn. So our initial target, again, from our recent low to the high, again, I've picked that resistance area at 15,600, which happens to be just between the 23 and the 38% level. So this is just again an artful way of drawing a target. That's the NASDAQ. And lastly, I've got the US dollar. This is on the daily chart. So again, we've got a bullish divergence on the CCI, and again, you can see there it's still rising. I'll bring it right out to there, versus a bearish on the price. Now this is bounced up from there and hit this support at 13139. Now this has already had a few trend lines drawn previously, and that coincidentally aligns with those two trend lines. Now why did I put it there? So let's draw that Fibonacci to that high. You can see there that aligns with the 38 to the 50% level. And where you would enter typically, let's choose, you could do it above those, but that gives you very little. So there's a big gap there. So you want to try and get in a bit closer to home, to where we are today. So let's do this. Let's bring it up to that top of that wick. We're going to cut through those candles, and probably, let me do that again. I'll probably, you need to cut through as many candles as possible. So you can see there, it's cut those between that wick and those two wicks, cut through those candles, and then cut through these candles up here through those tops. So that's probably going to be your entry, and that'll be your target area on the US Canadian dollar on the daily. So that's what we've covered today in terms of divergence. We've got that was a silver, gold, the S&P 500, the USDXY, the NASDAQ, and the US Canadian on the daily. Thanks, guys. If you want to get more insight into trading strategies and approaches, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies, and commodities, and also scan for potential divergence as well as trend following stocks. Subscribe, like, and share the channel, and see you in a future video.